Good morning, ladies and gentlemen. This is Butch Shorak, Options University. This is Market Forecast. It's Monday, September 3rd, 2013. And what are we doing? We're watching the market crash up. So, access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we're not a service that tells you what to trade. We're not implying or guaranteeing any profits. And as always, do not trade with money that you cannot afford to lose. Well, what did the market do as it crashed up another week, and certainly did it on some amazing news. Looking at the Dow, the NASDAQ, the S&P 500, the Russell 2000, we don't see gains like we saw last week, but look at them. The Dow up 0.5%, NASDAQ up 1.4%, S&P up 1.3%, and the Russell up 2% or 1.9%. Looking at the lofty levels for the year to date, Dow up 17.9%, NASDAQ up a blistering 25%, S&P 500 up 19.9%, striving to hit that 20% level. And we look at the Russell 2000, the leader throughout the year, up 26.4%, as we see the market just keep crashing to the top side, as the whole world is happy about the big money that the Fed keeps pumping in. Remember the old rule, do not fight the Fed, and it's certainly been the situation. Certainly have had a big move to the upside as we are in lofty all-time highs. All right, taking a look at what kind of economic announcements we have this week. As we finished with the quadruple witching on Friday, we see that Monday morning we got PMI at 858. And then as we come into Tuesday, we see we got Case-Shiller at 9 o'clock, consumer confidence at 10, Richmond Fed coming up at 10 o'clock. Looking at Wednesday, you see you have durable goods at 8:30, new home sales at 10 o'clock, some information to see what the home market is or is not doing. Looking at the GDP at 8:30 on Thursday, jobless claims which come out every week at 8:30, and we see pending home sales up at 10 o'clock. And then as we come into Friday, September 27th, and approaching the new earnings season that'll take place in October, we see we have personal income coming out at 8:30, consumer sentiment coming out at 9:55. So quite a few economic announcements coming up for the week, and certainly can have some effect on the market. But can anything stop this bulldozer from moving forward? Not very likely until we hear some changes. It was an interesting week in that we heard the Fed say that they're not going to begin the tapering, which was expected, and boy did we get a gap up on that kind of news. Syria doesn't seem to be bothering the market anymore at this point, and it only knows one direction. Of course, be weary of a market that crashes up. It will crash down in the same way. When will it happen? When we start getting the economic news that'll move it down, creating uncertainty. It probably will come from the Fed. All right, looking at the SPX for the week, we see, what did we get? Well, we had a breakout last week, and so we broke out into new highs. That taking place on news from the Fed. When we have that Fed meeting, it certainly can move the market. Look at that day on Wednesday as we saw it kick out. So we see that we continue the uptrend as we had our pullback, didn't get down to the 200-day moving average. We've got the 30 above the 50, above the 200, our standard bull market scenario. And we see that after that big day up on the Fed announcement, it does what it often does, pulls back, closes that move in the market, and then we can expect a bounce coming up. Will it pull back to the 30-day moving average? We'll see. It looks pretty strong, but watch for higher highs and higher lows for your next entry, for short-term entries into the market. Now let's take a look at some of the other indexes and see what they did. Before I do that, let's take a little closer look at the week. And we saw that we were moving up on Monday and Tuesday as we were going into the Fed meeting. Pretty strong move considering that there was that uncertainty coming out with the taper. And then we saw they announced that they are not going to begin the taper yet, and boom, up this thing goes. Huge day up on the market. And then we saw that we've had our a little bounce back after that huge bounce up, and we would expect that to take place. Expect this to come back right down to about 1,700 or so as we see that the market is doing what markets do when they're in this bullish trend. All right, looking at the Dow, what did we see there? Great strength out of the Dow, but look at this pullback. The 30 stocks in the Dow are not showing the same great strength that the S&P is showing. But what do we look at to see what really the overall market's doing? Do we look at a market that's got, or an index that's got 30 stocks in it, or an index that's got 500 stocks of the strongest companies in the United States and the world? Looking at the NASDAQ, not shy there. Look at the relative strength with the NASDAQ. We call that an uptrend, folks. And as we see it, we see that it has not pulled back near as far as the Dow did. And so NASDAQ, we're certainly moving up with strength. Russell 2000 show us exactly that same kind of strength as it's pulling up. Hardly a pullback compared to what the Dow did as we looked at this past week. Big move up on Wednesday. This one actually had a big move up on Tuesday. Remember, we've talked before about how the Russell can be a predecessor to tell you where the market's going. Tends to pop up a little sooner and tends to pop down, giving you some kind of leading indicator on where the S&P is going. So it's something you can key in on. As you saw, very little movement up in the other markets on Tuesday. And look at what the Russell did, closing at the high of the day, and then boom, out came the news on the no tapering. All right, so we see Russell 2000 certainly showing us that nice bullish move. With the 30 again above the 50, we did have that crossover take place back about 10 days ago. So Russell 2000 showing great strength. What's the VIX do when the market goes up like this? We would expect it to pull back. Let's see if that's what it did. And there we are, down around the 13 level. So we're in that in what we call normal range for the VIX, as we see it most of the time fluctuating between 12 and 15. Did have this little bit of a pullback here, which means the VIX is a contrarian indicator. It went higher as the market pulled back below the 50-day moving average back about 2 weeks ago. All right, so we see the indexes looking healthy, looking like they're crashing up. And let's take a look at the bond market. Our bearish bond market looks still like that. Did have a little pop-up on it, but boy, look at this thing. It's just heading back to the previous lows. So we'll see it pull back to that 12 level here shortly. I'm sorry, we're looking at... that is the right chart. I believe that is the wrong title. No, that is the wrong chart on the bond market. So do not pay attention to what I just said there. But nonetheless, you can pay attention to what I said as far as expectations. The VIX did pull back, and you can pull that chart up and take a look at it. Looking at gold, our ETF for gold, we see that it did have a big pop-up on Wednesday, kind of interesting, and pulled back like the overall market, not showing anywhere near the bullishness that the overall market, and certainly nowhere near its previous highs. Market down over 20% in the during this year. Looking at the volume, what kind of volume did we have? Look at the volume. It was the biggest volume we've seen in quite some time, basically in 3 months. Took place with that information on the lack of tapering. Then this SPY pulled back, looking very much like the SPX is what it should look like, and pulled back with a bit of volume. We'll see if we pull back to that 30-day moving average. But good volume, and the pop-up on the news well received from the Fed. All right, looking at the financials, the XLF, we see that it looks very much like the overall market. Certainly are not in the same highs that we see the overall market going in, because we've found some resistance finally for the financials as that industry has not kept up with the overall market. Do have that bullish scenario with the 30 above the 50 above the 200. XLF having trouble breaking through that previous high. All right, looking at oil, the oil's kind of sitting there going sideways, going nowhere. Moved up at the beginning of the summer and stayed up summer so that they could take advantage of all the vacationers traveling around. All right, and then finally, those of you that are gold members, stick around for our stocks to watch, and we'll see what they did during this bullish market that we saw during the last week. See which ones moved, which ones didn't, which ones we expected to move. Did they follow the overall market? And looking at these patterns to see if they provide for us an edge in the overall market so that we can use our option tendencies strategies and our option strategies to pull money out of the market. With that thought, gold members, stick around. This is Butch Shorrock. It's Options University with Market Forecast on Monday, September 23rd, 2013. Ladies and gentlemen, thank you for being here. For those of you that would like other free videos, watch the video at the very end of this, as you hear on the lyric and see on the page other sites on Options University you can go to for free videos. Thank you for being here.